information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.
Hello and welcome to Your Money, Your Call. I'm Julia Leaf, and joining me on the panel tonight we have Nick Radge from the Chartist. So let's start off by talking about what's in store in 2014. What about from a technical point of view?
Well, technically we've been a little bit cautious over the last 3 or 4 months, and you've seen prices come off a little bit in the last week or so. Again, the small ordinaries is still continuing to struggle, and I would expect that's going to continue. US markets have had a phenomenal year. Now, historically, once the US market puts in a 27% year, like it's done, you generally have very much a reversion to the mean. Not necessarily a negative year, but certainly a much softer year. So I would suggest that for much of the Australian market that's been struggling this year, I think you're going to get a little bit of weight on the market from the US markets taking a breather in 2014. So I'm expecting a little bit more consolidation, especially or still in the small ordinaries, which would put it probably into its 5th year of consolidation. Wow. Which is very similar to what we saw after the 87 stock market crash. So it's obviously a little bit of time necessary there, and I agree with Ben. I think the big end of town, dividend stocks will be still well bid, but I'm not sure they're going to shoot too much higher.
Okay, so a little bit more cautious on 2014. Let's go to our first caller. We do have Terry on the line from Maitland. Terry, welcome to the show. What's your question tonight?
Oh, hi, Julia. Happy New Year, guys.
Happy New Year.
Thank you for taking my call. My question is a general question about what stocks do you think will benefit and do well in 2014, or stocks or sectors?
Perfect timing for a question like this. What stocks, what sectors are you looking at in 2014? I mean, Nick, you just mentioned that the small ordinaries looks like it's still going to consolidate. So you're looking at the mid-size part of the market to the large caps?
That's the area I tend to focus on personally. I guess saying that, it's quite interesting because it's been consolidating for so long. A lot of people have given up on that part of the market. And when you get that, I won't say capitulation, but I know there's people in that part of the market saying it's all too hard. Let's go into the high-yielding dividend stocks because that's what's been going well. But chasing performance like that tends to work in reverse. So I think, as Ben said, those dividend stocks have had their run. If you're going to go there now, you're probably a little bit too late. And those that are pulling out of the small ordinaries, well, you've probably put up with the toughest part of the whole thing, and sod's law said it's probably going to go now. But we don't try and pick stocks. We just run with the trends, and if they're there, we ride them. And they certainly haven't been in the small ordinaries over the last 18 months or so.
Okay, so small ordinary is the place to be in 2014. We'll see. I mean, over the last month, we have seen the small odds up 4.3%, so that's around about double what the general market has done. But, of course, over the past year, down by 6%, whereas the market's up by 13%. Now, Nick, I know that you trade based on momentum. So in terms of sectors and in terms of individual stocks, which stocks or sectors are catching your eye?
Well, Ben's mentioned a lot that I have myself. I mean, you know, the DLX, the HGGs, those kind of ones, they're trending very, very strongly. CSL we've had for 2 years now and we'll continue to hold that. Interestingly enough, we just got out of Ramsay just recently on that pullback. So, again, look, it could set up. If it keeps going, we'll just join that trend again. But there's certainly some nice trends still going around.
Okay, so the healthcare space looking pretty good at the moment. Let's go to our next caller. We've got Luke on the line from Brisbane. Luke, welcome. What's your question tonight?
Yes, hi, Julia. Just looking at Rio Tinto. It's come back from $69 to around about 66. Can we see further downside?
It's a good question, and I think this is a question for Nick. Looking at Rio Tinto today especially, we did see the stock coming down quite substantially. Is this a buying opportunity, or are we going to see more downside here?
Yeah, there's a good gap down there today on slight increase in volume. There's good support running through at around the 64.70. I would be concerned if it broke down through that. Look, it's had a good run. It needs a breather. If we can consolidate above that 64.70 for a month or so, that'd be very, very positive, and we could have a go at the recent highs around that 72, 73 level. But if we broke down through 64.70, I'd be just standing back a little bit at the moment and just letting it sort itself out.
Okay, so probably at an important crossroad in terms of technicals and just watching price action from here. We've just got the Rio Tinto share price chart up there, and you can see it's been a nice upward-looking trend coming back to that support line, and Nick's saying just watch that support line to see that Rio Tinto does bounce off that, otherwise we could see weakness. And we've got Michael on the line from Melbourne. Michael, welcome. What's your question tonight?
Hello, Julia.
Hi.
Thanks for taking the call, and Happy New Year to all and your panel and that there. I've got a couple of questions here, both technical and fundamental. First one's Quick Step Holdings. QHL's the code.
Sure.
They're in composite manufacturing. I've had their stock for a while, and I think they've probably got a little bit of future. So I'll be interested in the fundamental analysis of that particular company, plus maybe a chart from Nick.
Sure.
And more particularly Telstra from Nick. Thanks for your site too, Nick. I'm a subscriber to you, and it's a really good site. Telstra approaching their 10-year resistance levels. What's your thoughts about them getting above it and going on? They're the two questions. Thanks, Julia.
Questions. Let's start off with Telstra, Nick. You know, Telstra's one that a lot of Australians hold, a lot of viewers hold. It's been doing very well on the market in 2014. What do you think?
Yeah, we've had Telstra in our momentum model since late 2011, so it's been a nice ride. Michael, it's one of those stocks where we've come a long way, and it's spent pretty well half of 2013 moving sideways, which is a very positive thing, and it's now just breaking out to those highs that you mentioned. So it looks really good to me. It's you can't argue with a stock that's making, well, almost 10-year highs. So you've got to stick with it. Trend is firmly up. Higher highs, higher lows. There's no reason to be turning around and selling that yet. Okay,
so trend is up for Telstra. What about Quickstep? QHL is the stock code. It is a smaller company, market cap of about $100 million. Just having a look at their last announcement, they've signed a $75 million contract with Lockheed Martin to supply wing flaps.
Wing flaps.
Well, they're important. Yeah.
For their,
Planes need wing flaps.
for Super Hercules military transport aircraft. By the looks of it. I mean, technically, it's been a little bit all over the place, but the second part of the year, it's been doing quite well. What do you think, Nick?
Yeah, an interesting stock, Michael. It was in a basing pattern there from most of 2012 and half of 2013, with the top end of that base around 20 cents, and we broke up through that sharply earlier or mid last year, and we're now sitting above that. Quite a volatile stock. Historically, it does put in these big spikes and come straight back again. So it's not particularly a nice trending stock at all, but certainly some positive momentum behind it at the moment. Consolidating above that 20-cent support. I guess if you wanted to be aggressive, you could lean on that. That is, buy against that support, place a stop loss under it, and see if you can't get some upside momentum. But as long as it stays above 20 cents, looks okay.
Let's go to our next caller. We've got Bob from the Gold Coast. Bob, welcome. What's your question tonight?
Good evening, Julia. Love your show.
Thanks, Bob.
TPG, it just seems to be going up and up and up.
Absolutely. I mean, today was a record for the company, an all-time record high. We've never seen the stock price at these levels. So let's go first to a technical view. Nick, what do you think of TPG?
I've got it myself. We've been riding this one off and on, Bob, for a couple of years now. When it was back down around the 158 mark, we're 550 today. The stock at all-time highs. I mean, it's doing the right thing. Why sell it? It looks good. I own it. It's probably going to go to $10.
TPG looking good technically. And we've got Tony calling in from Brisbane. Tony, welcome. What's your question tonight?
Hi, Julia and team. How are you?
Good. How are you doing?
Good, good. Hey, look, just a question on Sonic Healthcare. I've been a long-term holder of Sonic, and just wondering how it's going. I've heard that there's some theory that it may be going to do well out of a fall in the Australian currency, but wondering whether I should be looking at switching to Ramsay or one of the other healthcare industry stocks.
Well, Sonic, it's interesting you've brought these stocks up. Tony, I mean, Sonic is quite a volatile stock. It had that big sell-off a couple of weeks ago, or a couple of months ago, as Ben suggested. But when you look at it against Primary, Primary's had that big consolidation phase now going on almost a year, and generally that's a good thing. It trended very well into that. It's now resting and ready to break out, and for breakouts you probably want to go with that. But Ramsay is the one belting along, and you know, it hardly had missed a beat on that sell-off a couple of weeks ago, and it's just been an exceptional trend. So, you know, two different kinds of personalities there, although they're both trending in the same direction, but Sonic's certainly a lot more volatile and maybe a little bit harder to stomach.
It is now time for a viewer email, and let's go to this one from Les. And Les writes, "Hi, Cash Converters has seen a pullback from its recent rally. Can the panel advise whether there's significant value in the stock?" We know that they announced a class action in the last quarter of 2013. Doesn't really explain how sharply the share price has fallen away. Nick, what are your thoughts?
Yeah, interestingly enough, where prices are coming back to now, second quarter last year, we dropped from 160 odd down to 80 cents, and when we hit that 80 cent mark, we saw some very big buy demand come in. Now, interestingly enough, that's the kind of area we've come back down to again this time around, and we're slowly trying to bounce. So it could well be that there's some buy demand down around this 80, 85 cent area, and that might offer a bit of support. But generally speaking, the damage that's been done, we want to see some sideways consolidation and a few more sellers get bored of holding the stock and exit. And once that's done, once that supply has been alleviated, then potentially the stock can rise. So support at 80 cents, I would certainly be concerned if we broke down through that, because that's quite a significant level.
Let's go to our next caller. I've got Glenn on the line from Sydney. Glenn, welcome to the show. What's your question tonight?
Oh, hi, Julia, and Ben and Nick as well. Look, Julia, continuing on with the healthcare or the biotechs, my question is in relation to Resonance, RHT. Now, I've noticed that this stock has a particular software that relates to MRI, imaging, and with the fat in the liver, and apparently, with the FDA approval, this seems to be a fairly good story. I got into it recently. It shot up and it dropped back a little bit, and I got into it at that stage. Do you think QBE's clawing its way out of this hole after suffering a dagger to the heart? Thanks, Julia.
Let's start off with Resonance. RHT is a stock code, and we've just got the stock chart up there. So let's go to Nick first. I mean, the share price has just absolutely shot up. How do you manage a position like this?
Yeah, well, this is one of those highly speculative kind of stocks. I mean, it's basically done absolutely nothing from 2006. Interestingly enough, the point at which it's now shot up to was a very major level of support extending all the way back to 2004, 2005. So old old support becomes new resistance. That's where we're at now. The secret here, Glenn, is watching where the closing price is on a daily basis compared to the volume. Now, for example, today, we had a high today of, what did we get up to there, 9.6 cents, but we closed quite a bit lower than that and on very, very high volume. And that means sellers are coming in, and that makes sense. The stock's gone from 2 cents to, 9 or 10 cents very, very quickly. So it makes sense that people want to take that profit. So generally, when there's profit taking about, that will manifest on itself and continue, and that probably means the stock's not going to go too much further in the very near term unless it gets some more news. So once those sellers are out of the way, then potentially look to buy another breakout. But quite volatile. It's moving around, a lot, as you'd be well aware.
The other question was around QBE. It's probably looking pretty good. It's already up 20% from the lows that we've seen after that profit downgrade. Would you be sticking with it, Nick?
This is the exact same situation that we saw in January 2012 and again in November 2012. It's the exact same price, a strong level of support, being supported by strong buyer demand at the exact same levels. This is probably a low point. I'm not saying it's going to go screaming higher from here, but we saw significant capitulation, exactly what we saw in late 2011, and again exactly what we saw in October 2012, and that's followed by a good buyer demand coming in, buying the dip. So I think the insiders are in here buying it again. It's going to trade the range, and probably over the next year or so, probably trade up to where it's just come from, exactly like we've done before. So long as it holds $10, I think it's great down here. It might trade sideways for a little while, but I think most of the damage has now been done.
Okay, so long term, targeting $16, $17 again. It's around the $12 mark at the moment, or getting to that $12 mark, finishing at $11.87. And we've got Rob on the line from Melbourne. Rob, welcome to the show. What's your question tonight?
I'm just looking at the panel's technical view on two stocks. One is Seven West Media, SWM, and REA Group.
So having a look at Seven West Media and REA, and let's start off with the technicals for SWM. Nick, we've just got the chart up there. What are your thoughts?
Yeah, Rob, I mean, it's been trading sideways, as you'd be well aware, for all of 2013. It trended nice through late 2012, and it's just been moving sideways now. I'd like to see it get up through that 250, 260 area before I join in. At the moment, it's a bit of no man's land. So if you can be a little bit patient, perhaps wait for that momentum to come in, break that line of resistance. If we can get up through 260, your next point of target is around that 375 area. Trends very, very well when it gets going, and the fact that we're going sideways now for this period of time is a good thing. So just be a little bit more patient. The risk in getting in here is we stay in the range and we just rotate backwards and forwards. The bottom end of that range is around the 185, 190 level, and the upper end of that range is 260. So that's kind of a bit of a no man's land in there for the moment.
What about REA Group? Will it go cheaper, Nick?
Yeah, well, it certainly trends, Rob, when it gets going, and a sign of a very, very good business. So, look, it's pulled back a little bit. I'd like to see a little bit more consolidation here. 34 is your magic line in the sand. 34.70 actually is your magic line in the sand. If we can stay above that, all continues to look positive. If we broke down through that, I would be a little bit concerned that some kind of a significant high has been put into place. But at the moment, it's looking okay. It's coming back to fill that gap. So if you can get on with and break out to new highs, you just want to have to go with it.
Okay, so that's REA Group. Let's go to our next caller. We've got Abe on the line from Sydney. Happy New Year, Abe. What's your question?
Thank you, Julia, and Happy New Year to you.
Thank you.
I'd like to ask the panel opinion about the performance of the energy stocks in 2014, and also about later.
I mean, a very interesting question regarding the energy space. We're seeing the US becoming self-sufficient in terms of energy needs, and I guess there's a bit of different opinion in the market. On one hand, people believing that, you know, oil prices are going to be lower because of the shale gas story and the US being self-sufficient, and on the other hand, other analysts saying, you know, the demand's still there, the demand's still strong, oil prices are still going to stay relatively high. And then separate from oil is the whole natural gas story, where natural gas prices have been going absolutely crazy in the US because of what's been happening in terms of the weather over there, where it's freezing, and of course gas in Australia being huge. So lots to talk about. I mean, we have Oil Search's share price graph up there. So, Nick, we might just start off with you. It has been falling over the last quarter. What are your thoughts on this one?
Doesn't do a great deal for me, I'm afraid. It's a choppy kind of a stock, doesn't trend particularly well. Hard for us to stay in it when it gets going. So don't really like it from a trading perspective. You're quite right, it's pulled back. I would only probably look to join it if it settles above $7.50 and finds a bit of a base there. You might want to trade that, lean against that support. Alternately, you've got some resistance up there around that 875. So at the moment, kind of mid-range. Short-term trend is down. Long-term trend is probably now in a consolidation phase or moving sideways.
On a technical view on Leighton's, it has just bounced. Can it sustain that bounce?
It doesn't look particularly pleasant at all. Good strong line of support running through there. What's that? Just above the $14 mark, $14.60, $14.50. It's bounced off that a few times, but really trend's down at the moment. We're range bound. I wouldn't be touching that unless, you know, we can move, you know, probably up above $20, and we're a fair way from that at the moment.
We've got Andrew from Canberra. Andrew, welcome. What's your question tonight for our panel?
First is VLW. And the second is IPP.
Let's start off with Villaworld. I mean, you know, the residential property market has been doing well in 2013, and this stock's followed that trend upwards. Nick, having a look at this chart.
Yeah, well, it has been a very, very strong year. So this sideways price action that we've been seeing for the last three months or so is very positive. So Andrew's got it right. You know, I think he's just been patient there and look to buy the breakout again or add to positions on the breakout. So just a little bit of patience here. It's just having a rest, and that's a good thing.
Now, what about IPP? From a technical point of view? Almost
exactly the same picture as Villaworld. You know, I've had a good run up through 2013. The last quarter we've been consolidating, just moving sideways, having a rest. Looks great. If it can break up through 208, 210, you'd go with it again.
Okay, so looking good for both Villawood as well as iProperty. So our last caller of the night, two very good stocks from a technical as well as a fundamental point of view. And on that note, that's all we have time for today. Thanks so much to our guest tonight, Nick Radge from the Chartist.